right, so before we talk about trading system, let's talk about current market conditions. So spiders, we are at all-time high, currently trading at 299.80, right, trading along the upper Bollinger Band. So based on the technical indicators, my market is overbought. I would be cautious at this point to chase the rally. So if you read our market commentary, I advise not to trade around, not to chase the market at the 300 level and potentially wait for the pullback to the 50-day moving average 290, 291. I think the first level of support is 295. That's the high from the May. Right? So 295 is the first level of support. We've touched that briefly a couple days ago. And now let's make this larger. Right, so to 295 is the first level support. If we break to 295, buying at 290. So 290, 295 is a better entry point than I think 300. Potentially we can overshoot to 3 or 4. But unless we have a very strong earnings season or we reach an agreement with China, or if the interest rate will be cut, which is all of that information will probably be available till end of July. So until then, for the next 20 days, there's still going to be a lot of uncertainty in the market, and one should expect potential pullback. What are some indexes that drive the market? Let's go over that too. I would keep an eye on Treasury. So Treasury yield rebounded from probably oversold position. Yield was too low, the 10-year yield. So we're looking at the prices of TLT, where we're at 135. We dropped to 129.50. I said I was bearish on the Treasuries. Now they're pulled back. We have this key support in 130, which we briefly breached today, and we're trading right at the 50-day moving average. That's the key point for Treasury. I think at this point, Treasury is overbought and Treasury prices will go down. I think that's the main uncertainty, I think, in the market. Expectation that interest rates will be lower. That means that the Treasury prices will have to go up. Right now, Treasury is sold off. Market continues to rally. One explanation could be that Treasuries were just overbought and now they're selling off. I personally believe that Treasury prices will continue to go higher. This is just a short-term correction. And that means that most likely that the spiders will sell off and there will be flight to safety, and Treasury prices will go up and spiders will sell off. For Treasury prices to continue going higher and if spiders continue to go higher, that correlation at some point has to be broken, and I think that's one of the correlations that right now are broken. So short term, I think Treasury will hold at 130 level. They will rebound back to these overbought conditions, and that this market will sell off. To not sell off, but at least retrace back to the 50-day moving average. Let's look at the VIX. July. Let's look at July VIX futures. Not a lot of uncertainty in the VIX futures. We're back at 1312 level. Let me move this back somewhere. All right, so Treasury is sold. Interest rates. Let's do 1-year chart. 2-year chart. So Treasury prices did sell off. You can see, the VIX sold off. We're at 13-14 level, approaching the 12 level. This is the futures, July 19 futures. It's a period of complacency, right? Not everybody is hopeful that the interest rates will be cut, that we're going to have a good earnings season, and that we will reach an agreement with China. And if all of these things do happen, then this would be justified. But I think if any of these unknowns become not the reality and will not happen, then I think this is the time where you should be cautious and potentially buy hedges such as VIX, selling spiders calls or buying spiders puts. Let's look at Russell 2000. Underperforming the market. We haven't reached kind of reached the 160 level, maybe February high. We're not at all-time high. So we're trading at 155. You can see we're between 160 and 140 level. Let's look at the Russell 2000. Let's look at gold. Gold is approaching 135 level. We are at 1 year high, so gold prices did rally. That indicates that there is still, people are still nervous and hedging their portfolios. Same thing with gold miners. Gold miners are also at the 52-week high. QQQ, technology sector. Let me see. Let me know if you guys can hear me, if this is a better audio. Okay, perfect. Robert, can you hear me now? Is this better now? Okay, perfect. Thank you. All right, so Nasdaq is at all-time high, broke the May high and trading at 194 level, underperforming the market for the past couple of days. You know, one of the divergences from the main trend that also we'll need to keep an eye on. So we talked about treasuries, we talked about, US dollar, right? Another unknown that drives the market is the US dollar. So usually I look at the euro. And you can see downward momentum in euro. That means stronger US dollar. And again, as long as right now, as long as we have a strong US dollar, that also puts overhead resistance on the market. So how do you trade in the current environment? I think